Hello guys, welcome to the YouTube channel. So today I want to show you a very underrated indicator. It's called pivot points. Before you click off the video, no, I'm not trying to sell you anything. This is a tool you can get for free on TradingView, MetaTrader, and maybe on CTrader and other platforms, but I'm not too sure about them. So what are pivot points? So before we go into exactly how they work, I just want to say that these aren't made by me. They haven't been invented by me or any other sort of social media guru, whatever else you want to call them. These pivot points were developed on trading floors way back in the day. And as far as I know, they're still being used on trading floors as we speak. So what they actually do is very interesting. So they take the highs and lows of the market from the previous day, and they plot new supports and resistances for the current day. So you can see we've got R3, R2, R1. We've got a pivot point. We've got S1, S2, and S3. So obviously support, support, support. We've got the pivot and then resistance, resistance, resistance. So when we are calculating pivot points, I just want to be totally transparent. If you do want to make your own or do the maths check or whatever, these are the calculations. So the pivot point is the previous high, previous low, and the close of the daily candle divided by 3. Oh, excuse me. Resistance 1 is the pivot point multiplied by 2 minus the low. Support 1, I won't go through all of them, but you can see them on screen. And this is on baby pips. These formulas are completely public. You can go and check them basically anywhere. Just type it into Google. Now, there are statistics behind these, which I'll go into slightly later in the video. But these statistics are percentage chances of what happens at each level, and they're very, very accurate. So when we are looking at this chart, what do you see? Do you see anything other than a bunch of lines? Because I wouldn't blame you if you didn't. So pivot points are just mainly these 7 lines here. So the reason I've got them all the way back is because I have developed this indicator specifically to hold on to the previous pivot levels from previous days, just so I can have them in mind at reference, and just get, when I'm doing my chart analysis, I can just double check what's happened and where it happened. So let's take the previous data on Bitcoin on the hourly chart. Now these pivot points actually mainly work best on stocks and currencies. So the reason I'm using Bitcoin today is just because it's Saturday, the FX and stock markets are closed, and this updates obviously on market open, and we haven't had a market open because obviously it's Saturday, whereas Bitcoin's obviously open 24/7. So enough babbling. We've got here, we have the pivot point in grey. So if we just track this all the way back, we can see pivot point here. So what did we see here? We saw a huge drop off. We smashed through S1 and then we came down to S2 with this wick. Now you may be interested to see what happens here. We had a huge rejection and then we came right back up. So this already acting really, really strongly as a support. And then we had it come down, and again here S3 slightly broken but didn't hold below for very long. And then the next day we can see here S2 rejected very, very strongly. Very, very nice reaction here. We had 2 wicks to the downside. We had a bullish candle, and then we had a continuation of this bullish move all the way up. So this is how pivot points work. It's just to keep in mind of support and resistance, basically. And they are semi-dynamic. So they're not dynamic as in they move throughout the day. They will always stay in one place throughout one day. And then as the new day comes, as the new market open comes, they will move and take into account the previous day. So they're very, very good, especially in trending markets. So what I will do is show you the dollar-yen pair, because this has had some nice trends, and this has a very nice place where I can show you. So here, we can see we had a very, very nice trend to the upside on dollar yen. So where we had the pivot point here, and this was sort of the change of the trend. So we can see we had R1, and it doesn't, just because it supports and resistance, it doesn't always mean it will reject them. Sometimes it's a good place where you can see price break through and then retest, and that's what we had here. So we saw price break above, come back and retest, and then this is now sort of a support. I mean, it's still called R1, but you can think of it as a support now, broken above. And then on the new day, we had the pivot point, which was obviously acting as a support here. We're rejecting the pivot. Again, we came back to reject the pivot, and then we sort of just carry on this smooth journey to the upside, rejecting here, rejecting here, rejecting here. And we just continue to use these pivot points as levels where we could potentially get in. And that's the whole point of these. These aren't complex. They're not difficult to use. You don't need to, you don't need to go and back test loads of data and do all that sort of thing. Because these have been public for such a long time, the data is already at your fingertips. All you need to do is understand slightly how to use them. And this is it. So you can use them very, very simply. So you can see here we had R1, which was rejected, and we saw a nice move to the downside. So if you just trade support and resistance, you could use these very, very easily just to catch a couple of pips here and there. Now, obviously, this is a ranging market here, so they're a bit useless. I don't really use them in ranging markets, but you can see here we had a Bank of Japan intervention, and on S2 we saw a really nice rejection and then moved to the upside. So it's very, I don't want to say they're easy to use, because I don't trade pivot points as I'm explaining them. I don't trade them, oh, it's rejection at S2, I'll buy. That's not how I trade. I use them more as a confluence and an idea to get into the trade. It's more of like a secondary confluence, if that makes sense. So there is another example on a trade I took here on dollar Swiss. So we had NFP come, and what can we see here at R1? We saw a huge rejection, and if we draw this up, this is a previous resistance with the previous day's highs. And this is a great level. So matching up pivot points, rejections with the previous market structure is a very, very strong way to get into the market. So I did take this trade because we had my strategy came into play. I don't want to go into that too much, but we had the EMAs that were on the downside. We had RSI that was overbought. We came up after NFP, huge rejection here, and also we had the resistance, and then we moved down to the downside. And then, we could have a take profit down at S1 if you wanted to, or even just at the previous lows, which is this red line, which I did. And yeah, it was very, very clean. And this is how you use pivot points. So last thing I want to get into is the percentage of, the probabilities of pivot points. So on R3, which is the top red line, we have a 12% chance of this actually being hit. So it's a very, very small probability. But then on R3, we have a 94% chance of it being rejected. So if it hits R3, which only has a 12% chance, there is then a 94% chance that price will reject and close back below R3. And the same thing goes for S3. We have a 94% chance that it will reject and close back above S3. So you can see here, the stats are right in front of you. So R1 has 56% chance. That's okay. That's, give or take 50% chance that, it's not a huge confluence, but it's something to keep in mind. R2, 82% chance. That's a great percentage. R3, 94. So if we are in an uptrend, so if we're moving to the upside, we see price come down and hit S2. What does that tell us? That's a great place that we could potentially get into a buy if your other aspects of your strategy are valid. This is that final cherry on the cake to get into the market, because we have now an 82% chance of rejection and closure above S2. So it's very good at giving you sort of that edge. It's just that thing to finalize your strategy. It's something that will solidify some trade ideas for you. So if you're like, oh, I'm not sure if this is a good level to get in, and if you're questioning yourself like that, maybe it's not a good level. Maybe you should listen to your gut feeling and your strategy. But since using the pivot points, I have found so many more valid trades that I previously would have ignored. And there is one other thing that I can tell you. And if you stuck around this video, this will probably be quite a significant bit of data that will help you. If you see the price or market open below the pivot point, there's a 65% chance that it will close back below the pivot point. And if we open above, there's a 65% chance that it will close above the pivot point. So we could take this day here, for example. Actually, let me just delete the previous rectangle. So here we can see during this day, price opened below the pivot points. The pivot points is grey line. Price opened below it down here. What do we see then? We see price move massively to the upside. We had a huge pump, and from what I remember, I think this was ADP. I can't remember exactly off the top of my head. But then what happens? We reject R1 perfectly twice. We created a double top. So if you didn't get in at this first rejection, you have a second chance to get in here at R1. And then what happens? Where does the market close? So this is open here, close here. Where does it close? Closes down past S1. So as I said, we have a 65% chance of the market closing below the pivot because that's where we opened. And where did we close? Below the pivot at S1. In fact, even lower than S1. So this is a great chance. So you could have taken this into mind. I mean, this doesn't fit my strategy perfectly. And I personally don't think I would have taken this, but that's because I'm very, very conservative with trading. But if you're a little bit more of a risk appetite person, or if you have a higher risk appetite, this would have been a great trade. So taking into mind the pivot point opening position, R1 double top, we take it down. What would this have been? A 75 pip move to the downside by just using pivot points. That's not taking into account anything else. You know, your strategy, your risk management, anything else. It's just pivots. And you can do this over and over and over, and it's very, very strong. Similar thing here. We opened, actually this one isn't a great example. We did open below, and obviously, like I said, it's a 65% chance, so it's not 100%. It won't always happen. But the way you can see it is we created a, oops, lost the rectangle. Created support down here. Why is my rectangle not drawing? There we go. Created support down here. Pivot point acted as support as well. We could say we rejected the pivot point, and that is something. We reject pivot points, which is quite nice. It acts as a support or resistance. So we came up, rejected this support and the pivot point, and then we continued up to the upside. But then here, what do we see again? This is what I want to take a second. Which resistance level is this? And you should have said R3. So we have pivot point here. We have R1, R2, and R3 here. Rejection and pull back into R2. So this again is the 94% chance, or 96, can't remember, 90+% chance of rejection here, which came into play. So it's very strong, and it's something I would urge everyone to at least try. It may not work with the way you trade. It works brilliantly on the sort of 15-minute to the hourly is where I use it personally. The 1 minute, 5 minutes, and the sort of 4 hours in daily are all a little bit too difficult. I mean, the 1 minute and 5 minutes are way too separated for me to really use these properly. As I said, it won't update because the market's closed, so I can only really show you the hourly on Bitcoin. But yeah, sort of 5 minutes and downwards, it's not really valid to use in my opinion. But yeah, 15-minute, 30-minute, hourly, perfect. So yeah, I mean, if you want this exact indicator, I'll be totally honest with you, I do sell it because the pivot points aren't the main part of this indicator. You know, you've got the buy and sell signals, you've got the oscillator down here, trend analysis. So this is available for much trade of 4 and 5. So if you do want it, I'll put the link in the description. But if you only want pivot points, don't go and waste your money on this because it won't, you know, there's no point, to be quite honest with you. I don't want to be trying to sell you things you don't necessarily need. So if all you want is pivot points, just search on the MetaTrader store or on Google or on TradingView. There'll be loads of them for free. They may not look like mine because, like I said, I developed this one myself to fit the way I trade. But yeah, there'll be lots of them for free out there you could potentially get your hands on. So that's it. I hope this has been helpful. Like I said, it's very simple. You don't need to overcomplicate these. It's just support and resistance at the end of the day. So yeah, I hope you have taken some value from this and it's been helpful. So that's it. Please like and subscribe, and I will see you all soon.